Let's get one thing straight. Your bank is not your friend. It's a business, and its main goal is to make money for its shareholders, not to help you. Every product, every process, every friendly piece of advice is designed to maximize their profit. The person across the desk? A salesperson with sales targets, not a financial guardian. Their advice is biased toward what benefits the bank, not you. Once you see this, you can start protecting your money. Too many people trust their bank blindly, thinking it's a helpful guide. But the bank is a machine built to separate you from your cash. The good news? You don't have to be a victim. Knowledge is power, and I'm here to give you the insider's playbook. We'll expose the hidden fees, the psychological tricks, and the systems designed to profit from your mistakes. Once you know the game, you can make your own rules. This isn't about being anti-bank. It's about being pro-you. Banks are necessary, but you don't have to accept their terms without question. Stop being a passive customer. Start being an informed consumer. By the end, you'll have the tools to make the system work for you. Keep more of your money where it belongs, in your pocket. Let's get smart about your money. Every banking product is a profit machine, especially when you make a mistake. That $35 NSF fee? Pure profit. The real cost to the bank is pennies. Overdraft protection? Sold as a safety net, but it comes with sky-high interest and monthly fees. The system profits from your cash flow crunch. Miss a credit card payment? You're hit with fees, higher rates, and a damaged credit score. Mortgage renewal? The bank hopes you'll sign their offer without shopping around, locking you into a higher rate. The bank profits most when you're not paying attention. They thrive on confusion and inertia, hiding traps in fine print and automatic renewals. Your job: disrupt that path. Be an active manager of your money. If you aren't, the bank's default plan is to move your money into their pockets. Stay alert and don't let them profit from your mistakes. From day one, your bank builds a behavioral profile on you. They track every transaction, every balance, every payment. This data predicts your future actions and determines what products you're offered. Pay off your credit card in full? You're less profitable, so they push fewer offers. Carry a balance? You're a target for more credit and debt products. Every interaction is influenced by your profile. Advisors see it on their screens. Their advice is often a sales script tailored to your habits. You can't stop the data collection, but you can use it. Always question why a product is being offered. Ask for alternatives and force them to justify their recommendations. Make them work for your business, not the other way around. Banks want you to use as many of their products as possible. Checking, savings, credit cards, mortgage, loans. They call it convenience, but it's really golden handcuffs. The more you bundle, the harder it is to leave, even if you find a better deal elsewhere. High switching costs keep you captive. The solution? Reject bank loyalty. Build your own financial dream team. Get the best product from any provider. Use a no-fee online bank for savings, a credit union for checking, a separate lender for your mortgage. Unbundling gives you power. Each institution must earn your business. When a product changes for the worse, you can walk away without hassle. Break the golden handcuffs. Stay free, stay flexible, and always get the best deal. Convenience shouldn't cost you your freedom. Meet Sarah. She had $5,000 on a credit card at 20% and a $10,000 car loan at 6%. Struggling, she went to her bank for help. The advisor offered to consolidate both into a line of credit at 8%. Lower payment, simpler life. Sarah signed immediately. But the new payment was interest only. A year later, she still owed $15,000. The bank's solution turned her short-term debt into a long-term profit stream. The lesson: always set your own payoff schedule. Never accept interest-only payments unless it's temporary. Ask for an amortization schedule. How long to pay it off in 24 or 36 months? A lower payment isn't a deal if you stay in debt forever. The goal is zero debt, not just comfort. Interest isn't the only way banks profit. Fees are their silent engine. Account fees, wire fees, overdraft fees, foreign exchange fees, they add up fast. Most people don't notice or challenge them, and banks count on that. Become a fee auditor. Review your statements, highlight every fee, and total them up. You'll be shocked and motivated to act. Call your bank and politely ask for fees to be waived. Often, frontline staff can help if you ask. If not, escalate to a manager. But the best move is to avoid fees entirely. Switch to no-fee banks or credit unions. Use lower-cost services for transfers. Opt out of the bank's fee game and keep that money for yourself. Don't let small fees drain your wealth. Banks love loyal customers, but they don't reward loyalty. In fact, they often charge you more, especially at mortgage renewal. You expect a great rate for being a good customer, but you get an inflated one instead. Why? Because they're betting you'll just sign and return the form. That laziness can cost you thousands in extra interest. Fight the loyalty penalty, never accept the first renewal offer. Research the market, get competitor quotes, and call your bank's retention department. Use this script: "I've been offered a lower rate by competitor. Match it or I'll switch." Be ready to walk away if they won't budge. Your loyalty should be to your own bottom line, not the bank's. Make them compete for your business. Don't let inertia cost you money. Negotiate hard and always put your interests first. Loyalty should pay you, not the bank. Your banking app isn't just a tool, it's designed to influence your behavior. Dark patterns nudge you toward choices that profit the bank. Pre-checked boxes for expensive add-ons, prominent buttons for costly options, hidden links for actions that save you money. Even closing an account is made intentionally difficult. Signing up for new products, one click. Canceling, a maze. This is deliberate, not accidental. Protect yourself, slow down, read every screen, uncheck boxes, and question recommended options. If you can't find a way to save or pay off debt, assume it's hidden on purpose. Use search or call the bank to get what you need. Don't let clever design trick you out of your money. The banking system thrives on information imbalance. They have the data and scripts. You have your statement. But now, you have their playbook. When you show you know the game, their approach changes. Disrupt their sales script by asking tough questions. Is this the best product for me, or just the one you're incentivized to sell? What are the total fees? Are you a fiduciary? Audit your accounts, demand fee waivers, unbundle your products, and always negotiate. Set your own debt payoff schedule. Never fall for interest-only traps. Be a skeptical digital user. Recognize manipulative app design. Knowledge is your shield and sword. Banks count on your silence, and confusion prove them wrong. Be assertive, informed, and willing to walk away. Make them work to keep you. You don't need to be a financial genius. Just know their tricks and stand up for your money.